Yet another investment banker just smiling all the way to the bank. This is just another proof how the rich are getting richer and the poor are getting poorer. So in today's video, what I'm going to hopefully explain to you guys is how do banks make money? Well, that's what I'm going to try to help you guys out. Because if you're watching this video, you're most likely trying to figure out what's going on with these and the whys because you're buying a house or refinancing a house. So let me help you understand how to track where mortgage rates are going, because if they keep going down from here, it might make that house that you're looking to buy a little more affordable, or that house you currently live in a little more affordable as well. So in today's video, I'm going to try to explain to you with all the news coming out today, what's going to happen with these and the whys behind it, folks. So my name is Dan Frio. I'm actually a licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. Love to help you navigate if you're looking to buy or refinance. I'll give you my information at the end of this video. Let's get to today's news. So I popped over the news and here we got, I'm looking at corporate earnings this week, and the first ones that pop up were Bank of America and Morgan Stanley. Look at what these guys make. The Bank of America guy made $35 million last year. Yikes. Okay, so what they do, same thing with Morgan Stanley, is they make money on investments and things like that. So how do you take advantage of these things? So what we're going to talk about in today is, are these rates going to go any lower? Because if they are, what do we track and which should you be doing? So let's kind of dive into what we're looking at. So here's the biggest pendulum we have working for us right now, the 10-year Treasury. Now, I know I keep telling you guys to watch the MBS market, but the 10-year Treasury is going to give us some signs. If we can close, if this thing can close below 4% and close for the day or 2 or 3 days, you're going to see a market rally into the bond market. So what happens? Okay, so first, let me explain to you guys what the good news was yesterday. We had Federal Chairman Powell coming in around noon and say, okay, we're still on the rate cutting path, but one of the things he mentioned was quantitative tightening in the ending of it. So here's what happened in the past. Here's what happened to cause mortgage rates to go down. The Fed was jumping in, buying up mortgage bonds by the billions each day. So that was driving down rates, because here's how these things work. We go over to the bond market. Now, I know I went through this yesterday, but this is more important than you guys think. So this is a mortgage bond. Okay, so what happened was when the Federal Reserve came in, they kept buying this and buying it and buying it to drive down the yield. So they were pumping up the prices by buying $40 billion a month. Okay, so what they stopped doing is stop buying. Well, what they did when they started quantitative tightening was they started selling the bonds back into the market. Well, think about it. We already have a huge deficit, $37 billion. So we already have too many bonds into the system. Then you have corporate bonds, you have mortgage bonds, but then you have the Federal Reserve dumping bonds onto the market as well. So what would happen? Instead of the prices jumping way up, they would come way down. What happens when the price of a bond goes down? Well, the yield skyrockets. And that's what happened when rates, remember about 2 years ago, rates hit 8%. So now what they're saying is we're not going to sell anymore. Well, that's going to ease the market just in itself. So you're going to most likely see rates easing just because of that, and hopefully the risk premium spread comes out of that as well. So if you're a little confused with that, join me each day. Make sure you subscribe over there so you can join me each day to understand this. But let's get over to some of the news that we have for today that I want to share with you guys. So what I do each day is I come out here and create, I have a new newsletter I want to share with you guys, and let me see if I can pop that up on the screen here. It's a brand new section that we want to keep adding each day. So let's get over to it. Here's a new section I want to show you guys that we're going to post each day on our website. So here's what it looks like. If you're new to my channel, I'm going to provide you guys a lot of information to help you guys navigate this market. So on my blog section on my website, I'm going to have this each day where it's going to go across, give you the top headline news for the day. It's going to give you where rates are. Then down through here, the two pieces are the biggest pieces of the data that the Federal Reserve monitors and the markets watch as well. Inflation data. We're not getting any of this data because the government's closed down. You're going to see the top news for the week right through here, each one of those. Then you're going to go down through here and see the jobs and labor departments and the top news. Okay, so the biggest thing is right down through here. Here's what I want you guys to take advantage of. This is going to be a section that helps guide you guys if you're looking to lock in now or you might want to wait. So here's what we want to focus in on, the 10-year Treasury, because you have complete access to that no matter where you look. If you want to focus in on the mortgage bond, this is right through here, the MBSs. Join in my channel each morning and each evening so I can explain to you guys what happened to it and the whys. But let's focus in on the 10-year Treasury because you have more access to that than anything. So we want to focus in, will the 10-year Treasury go below 4%? If it does, hold right now. Okay, hold on right now and wait and see what happens. Okay, if the shutdown goes for an extended period of time, we might see bond yields increase just a little bit more, basically where they are now or just a little bit more. Again, in that, lock in where the rates are right now, because the government shutdown, the longer it lasts, the more detrimental it might be. Then if you start hearing more and more dovish comments from the Federal Reserve, or you get some inflation numbers from somewhere that's showing inflation coming down, you might see the bond yield drop to 3.95 or under 3. That's when you want to float and just monitor. So how do you do all this if you're on your own? So let's say you're buying a house or you own a house right now and you want to refinance. How do you track rates? Well, one thing, you want to follow my channel every day. So like I said, subscribe to my channel. The other thing is, let's go over through here. Here's some tools I want to provide you guys. And we will be back here in a second because I want to go over the economic calendar with you guys and everything else. But if you want to check out my website, just go to therateupdate.com. If you're a home buyer or home owner right now, I apologize about that. Check out our RateWatch 2.0 trigger. What this does is it allows you to let me know what interest rate you want to refinance. So when that rate hits that, what I'm going to do is I'm going to call you, text you, email you. What we're going to go over is what your new payment would be, what your savings would be, and what the cost would be. We have to understand the cost to figure out what your break-even point. So those are the three main pieces of the puzzle you need to provide me if you're looking to refinance to take advantage of these rates. So let's get over to the economic calendar we have for the week, which is really nothing. We have Federal Reserve member Waller speaking today in Bostic. They might give us some insight to what the data is, but they don't have any data really. So let's get over to the earnings report, and this is where those numbers came in on the bank earnings. So this is where you really have to focus in on where corporations are going from right now, and it's how the stock market's going to do. So we talk about interest rates, mortgage rates, and so forth. We also talk about Stock Talk Tuesday, where we talk stocks, bonds, cryptocurrencies, and how to invest. This week we had a lot of bank earnings, like I just said. So today we had Bank of America. Look at the numbers over here. I don't know if you can see those behind my head. Let me increase these numbers a little bit. Let me blow this up. I hope I don't lose it for you. But we had right through here, Bank of America, earnings per share up 12%. Morgan Stanley, 33%. No wonder these guys are high-fiving and smiling all the way to the bank with their big old paychecks. So that's what we're focusing on today. When it comes to the economic calendar, there is nothing there. So what we're going to focus in on is the bond market. Right now it is flat as a pancake, but focus in on the 10-year Treasury. Subscribe to my channel. Make sure if you go over here, if you're a homeowner, check out the RateWatch tool, because this thing will let you tell me what rate you want to refinance. So don't be surprised one day if I call you, text you, or email you saying, surprise, your RateWatch just triggered. So that's my report for today, folks. I hope you understand a little bit more about how these work, what causes these to change, and how you can maybe take advantage of these if you're a homeowner or maybe a potential home buyer, where we can help you get pre-approved at therateupdate.com, because our slogan here is one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? Well, join us today live, me and Alan. I'll put you the link right up through there where you can see how we do this behind the scenes, where you can join us live to give us your scenario, and we'll give you right on the screen what your rate would be, what your fees would be. And if you like it, we can even lock you in then and get the paperwork started. Thanks for watching, folks. I hope to see you today at 2 o'clock at our live event. If not, join me at the end of the closing bell so I can let you know how this mess ends for the day. Thanks for watching, folks. I'll see you at 2 o'clock. Bye-bye.